Discipline is choosing between what you want now and what you want most. Abraham Lincoln. Well, my friends, 10 to 15 minutes a day, if you will set that time aside to practice trade, that is to follow the stock charts, to listen to this show, fill out your daily market worksheet, once a week your weekly market worksheet, and your trade worksheet whenever you do a practice trade. All those PDFs are available for free in your show notes every day. Plus, take that daily training. It's only a few minutes long. This week, it is about trading is not a savings plan. It's about how to set up your mind for victory, understanding what your X-trade amount is, understanding that trading is active, it's not passive, and to start your practice trading now. And again, every single day, we're here to encourage you. Those PDFs are in your show notes. If you're not a subscriber, go to chartingwealth.com, put in your email address, your name. We never spam that list. We never sell it. It is for us to convey to you our daily market reviews and all the free stuff we have to give, special trainings, PDFs, all the things you need, plus those daily teaching videos. So, go ahead and subscribe. Now let's jump into these charts. We see stocks, both of our indexes, the S&P 500 and, well, the Nasdaq 100. I was about to say it ended up just flat for the day. 0.00 for the day. The S&P's up about 0.6%. We see that 20-year bonds are down about 0.5%, but look at gold, down almost 2%, hammering down. I thought we heard gold was going to go up to $15,000 an ounce. Well, we'll let you know when it turns around, but right now, you don't want to be riding that precious metal down unless you're shorting it. Now, let's jump into the S&P 500, see where we are. Always remember, we're not a stock calling service. We're an education firm. We want you to practice trade with us, learn how these markets work. And they have been a bit screwy lately. I'm the first to tell you that. We had a weekly vertical crossover going up at the end of the week on Friday the 13th. And what has it done? It's just petering along, slowing down. What is going on in the world? My friends, I don't know. We don't have a president yet. As much as the media wants to tell us it's over, remember Al Gore and the hanging chads? He did not surrender until the 15th of December. That seemed fine with everybody. Well, now Trump has to cave in immediately with all the questions and lawsuits. I'm a trial lawyer by training. I love trials. I love evidence. I've learned to wait until you see what the courts do. So we will. Maybe that's what the market is doing. I don't know. But I'm continuing to watch, a bit puzzled, but I'll continue to track these charts every day with you. We see things are up for the day, like I said, 0.60%. This red open box candle though means a slowdown in the up movement. It's pushed through the trend line that we had over the last 2 weeks. So it's broken that weekly trend line. Derivative oscillator still gaining upward momentum. Price percent oscillator pulling ever slowly away. We look at the 2-day chart. We can see where the 2-day chart peaked on Tuesday the 17th. And then we have a red spinning top Thursday the 19th, and as we go into this latest candle representing Friday and Monday, it's a red spinning top, solid red. The prior was an open box. It's come through the 2-day trend line, which was connecting 4 candles, a rather nice one. That has been broken. That means more than just a sloppy trend line. And of course, it's a solid red down candle spinning top, so it means indecision tending down. Now that price percent oscillator still trying to edge up. Derivative oscillator is losing momentum, so we'll continue to watch, see where this goes. Look at that half-day chart. It crossed over going down back on the afternoon of Wednesday the 18th, and again, really sort of dropped there on the morning of Thursday the 19th, and then it's sort of sliding sideways since then, trying to move up a little in the afternoon. Price percent oscillator still negative, derivative oscillator still negative. So again, we have the 2-day and the weekly still in confirmed up moves, but weak. So we'll continue to watch, see where this goes. Now the Qs, the Nasdaq 100, the tech stocks, what are they doing? Well, still negative. Price percent oscillators pulling away a little bit from the red signal line. Derivative oscillators still negative. Red open box, so again, that's a slowdown in the up movement. And when we had that big up week where the S&P crossed over on the weekly price percent oscillator, what we call a weekly vertical crossover, didn't happen on the Nasdaq 100. So again, weak. Look at that 2-day chart. We might have, now keep this in mind, the 2-day did cross over back on the 9th going up. That represented Friday and Monday. What would that have been? The 6th and the 9th. And it has edged up and started losing. The last thing we had was a red doji. That's indecision tending down, breaking the trend line. We see the price percent oscillators. Looks like it's slowly heading down. Derivative oscillators losing some momentum. Both are still positive. But if at the end of the week or as we go along at the end of the next 2-day candle, which will of course be midweek on Wednesday, if you see a crossover going down, pay attention to that. We do have the Thanksgiving Day holiday. This is going to be a much shorter week, but do pay attention to what we see going on as perhaps the market weakens and we might have a crossover on that 2-day chart coming up sometime soon. And again, we see it still positive, but that might give us what's called a 2-day recross. That means the 2-day crosses over in the direction going down of the weekly. Now, we're going to go to the half-day chart. Of course, it crossed over going down back on the afternoon of Wednesday, the 18th. Went down the morning of Thursday and then sort of popped up and then started moving down again. So we'll keep our eye on things, see if this half-day chart's going to have enough power to pull that 2-day chart over. We'll wait, watch, and see. Put that in your show notes to pay attention to a potential 2-day recross going down on the Qs. Now we move on to bonds, down for that 8.46%. Last 2 weeks, or last week rather, bonds going up. This week starting off trying to move up. Price percent oscillator still negative and about flat. Derivative oscillator negative, losing downward momentum. Go to the 2-day chart. Latest 2-day candles, rather strong up candle. And again, that's based upon what? Friday's moves. Monday's moves were down, as I said. We see prices above the 2-day trend line. Price percent oscillator going up. Derivative oscillator heading up. But remember, you still have that weekly and a confirmed down move. So we're waiting to have the 2-day and the weekly move in the same direction. That either means a 2-day recross going down or the weekly rotate over going up. We'll see what happens there. We see on the half-day chart, price percent oscillators a little more than flat. Derivative oscillator losing upward momentum. We can see what happened in the morning, down movement, tried to recover some in the afternoon, down for the day, as we said, 0.46%, pierced the 4-hour, the half-day rather, trend line, and you had about 4 good candles, 2 days of good up movement, so that stopped on Monday for the time being. We'll wait and see how that continues to develop. So keep that in line, keep the powder dry, be ready to move whenever TLT gives you the opportunity. Now we move to gold, the big downer, almost 2% for the day. Look at that price percent oscillator pulling away from the red signal line, derivative oscillator gaining downward momentum, big red down candle already forming, and of course starting the week off, pushing through the 2-day trend line. And again, we can probably start to try to redraw our weekly trend line connecting the last 2 weeks. This is a down trend line. And we go from the weekly to the 2-day. What do we see there? Well, we see a 2-day with a long wick on the bottom. And we see, though, strong down movement, price percent oscillator kicking over, going down, derivative oscillator gaining downward momentum, price below the 2-day and the weekly and the 4-hour. So again, lots of strong down movement on gold. Don't forget we had that latest 2-day recross going down for those of you who played that one back on Monday the 9th. And again, still in play. looking pretty good. We look at what's going on the half-day chart. We can see where things bounded down the strongest in the morning and then didn't end up quite that low in the afternoon. Price percent oscillator spiking, going down, as is the derivative oscillator. It's where we are, folks. We're waiting to see how these markets straighten out and fly right. This is typically, as you hear me say over and over, the fall-winter trading zone, the fat time to trade. But it is a weird one. Summertime trading zone ended up being like the fall-winter trading zone. It's usually not a lot of volume. Prices sort of meandering here and there. It's the kind of market you don't even necessarily want to be in. It's where we have that adage in the market, sell in May and go away, live to trade another day. And that's supposed to end when we get in the fall-winter trading zone. We had a great summer. And now this seems more like summer with the sort of lackadaisical moves. But you know what? There's always something to learn. Stick with it. If you don't have our book, Charting Your Way to Wealth, you need it. Supercharge your training with that. And of course, with your daily market worksheet, weekly market worksheet, and trade worksheet available for free in your show notes at the end of today's video. I'm going to have all three of those trainings there for you that teaches you how to fill out those worksheets so you can supercharge your training. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.